So this morning, the Nationwide have released the latest house price index, and as you can quite clearly see behind me, contrary to popular belief and that of the doommongers, house prices are not on the way down. They're actually on their way up if we compare figures to a year ago. Now let's just take a quick look at the headlines. Annual house price growth edges up in March. UK house prices are now 1.6% higher compared to a year ago. Northern Ireland is the best performing region with prices up 4.6%, and the Southwest is the weakest performing region with prices down by 1.7% on the year. Now, here's the interesting numbers. On a month by month basis, if we look at the last month, March, house prices actually dropped by 0.2% compared to an increase of 0.7% in February. But the overall annual change is 1.6% up year on year in March compared to 1.2% up year on year last month in February. So commenting on these figures, Nationwide's chief economist, Robert Gardner, he said UK house prices fell by 0.2% in March after taking account of seasonal effects. Nevertheless, the annual rate of house price growth edged higher to 1.6% in March from 1.2% in February. Activity has picked up from weak levels prevailing towards the end of 2023, but it does remain relatively subdued by historical standards. For example, the number of mortgages approved for house prices in January of this year was around 15% below pre-pandemic levels. This largely reflects the impact of higher interest rates on affordability, and whilst mortgage rates are below the peak seen in mid 2023, they remain well above the lows prevailing in the wake of the pandemic. And this is something that we're seeing on the ground. Now, earlier in January, when there was a mini price war going on, lenders were all out competing to offer the lowest rates. Business was booming, things were picking up, and it looked like that was going to continue. But then, of course, the Bank of England Monetary Policy Committee was saying interest rates are going to need to stay higher for longer, and that then had a bit of a negative effect on the market. Swap rates went up, the lenders' rates went up as well. So that then slowed things back down again. Now, we did start to see more inquiries coming in March, but as you can see, because of these higher interest rates, it had a negative effect on house prices. Now, if we just scroll back up a little bit, there is an interesting chart here. This is what the 5-year fixed rates are looking like. So if you go back to like 2018, you can see 5-year fixed rates are averaging around about 2%. And then post-pandemic, they were below 1.5%, just above the 1%. And then, of course, you can quite clearly see when the landscape changed and the average 5-year fixed rate shot up. Again, all of this happening around the time that Liz Truss and Kwasi Kwarteng were in charge. Then going through 2023, the rates started to drop, but then at the end, they started to increase again, and now they're on their way back down, which is a good sign. Now, of course, the expectation is that the Bank of England are going to start to make some reductions in the interest rates. It's just a case of when they're going to do this. Is it going to be at the next meeting in May, or will it come in the June meeting? We're not entirely sure when it's going to happen, but I do believe that when that happens, we're going to start to see activity picking up. And these numbers on the house prices could very quickly change from modest growth into more increased growth. Because in the market, there is pent-up demand. We are starting to see more and more inquiries from people, but people are just sort of gauging where they're at, what they can afford. And then I think as soon as you see the Bank of England make that first base rate cut, that could be the impetus that the market's really needed. Now, that's going to be a really testing time because at the moment we find ourselves in a buyer's market. So while interest rates are higher and property prices are a little bit lower, buyers are in charge and buyers are actually dictating the prices that they will pay for property. But when we start to see those rates drop, that's when things will very quickly change from a buyer's market back into a seller's market. Mortgage rates dropping typically tends to mean that more people want to then buy, and as such, property prices should then start to increase. Now, this, of course, is based upon how we've seen things happen in the past. It's not to say that things are going to definitely happen like that this time round, but it does seem to be that there is pent-up demand. And I do believe that when those interest rates start to drop, things will very quickly change. So if you are looking to purchase a property at the moment, then perhaps now might be the right time. Speak to a good mortgage broker to discuss the best options for you in terms of what interest rate you choose going forwards. So you can try to manage your expectation, making sure that it's affordable and that you can also take advantage of any reductions in the future. But as far as purchasing property now really might be the right time to start getting proceedings underway. So please do let me know your thoughts in the comments. If these figures come as a surprise, did you think that house prices were going to be dropping year on year? And are you in the market? Are you looking for property right now? How are you finding prices out there? Have you been making mortgage inquiries? What's your affordability looking like? Lots of things that I'd like to know. So please, any thoughts, any feelings, any comments that you've got, drop this below and I will respond to each and every one of them.